Traders at UBA say they expect mixed sentiments from investors at the Treasury Bills market following Tuesday's poor OMO auction, as no sale was recorded at the auction despite the 86.5 billion naira worth of bids for the 364-day maturity. Kenneth Onuoha, team member, Assets and Liabilities at UBA, joins me now for more market movements. Kenneth, thanks a lot for joining us on the show today. Walk us through the details of yesterday's OMO auction. We're seeing subscription levels pretty poor. This has been low for the most part so far we've seen, and a concern. Walk us through the details here.
All right. Good afternoon, David, and glad to be here. Like you did mention, this week we had the OMO auction yesterday. Of course, the notice came at about 12 midday yesterday. We did see that there were 150 billion was put up on offer across three standard maturities, namely the 91, 182, and 364 days respectively. Interestingly, we saw very weak subscription levels. The total subscription level was about 86.5 billion, which indeed was quite poor, considering the previous, when we consider not the immediate, but I mean previous auction, OMO auctions. This particular one, we saw a total of 86.5 billion, and 99% of this was skewed to the long end. We saw rates not of about 23%, and at the end of it all, of course, at the point the results were released, we saw the fact that there was, amidst the very poor subscription and the very high rates that were actually quoted, there were no sales actually. So yes, that's the rundown of the events.
And also walk us through sentiments we're seeing in the market now, especially within the T-bill space. Mixed sentiments returning despite improved liquidity?
Oh yes, of course, typically we've seen very mild buying sentiments on the T-bill side, largely due to the improved liquidity. However, we do know that every focus has been largely skewed towards the longer dated instruments that are supposed to be maturing in May and July particularly, and the reasons are not far-fetched. The yields on these instruments are quite attractive. Of course, so we have cautious stance. People out there watching to see if the CBN is going to make any move in terms of how mopping up liquidity from the system. So people are just there. It's just pretty much a wait-and-see approach generally.
And for the bond space now, we're seeing the 2033 and 2034 papers seeing the most action as well now. What should we expect going forward into the rest of the week and as we enter the new month of August?
Well, generally, the interest in the bond space has been quite limited. The people are more interested in the Treasury Bill space. Activity is more predominant in the Treasury Bill space, and the reasons are not, again, very far-fetched. Of course, that does not mean that we've not seen activities in the bond space, but then it is minimal when you compare it to what's happening in the bond space. In the bond space, largely what we have experienced is we have seen calm, but then bearish undertones generally. We've seen more demand for the 2053, which is currently trading about 18%. And then we've seen the interest, of course, offers, in terms of offers now on the 2033s and 2034s, primarily because of the high yield. Remember at the last auction, the 2033s printed at about 21.98, which is quite significant compared to where it was in the previous month's auction. So yes, the interest is seen offer is seen along those mid-tenured instruments, but then again, we wait to see what happens in the coming days.
And for the currency market, where lies the fate of the Naira against the greenback, looking into the new month?
The Naira has consecutively shown a decline 2 days in a row now. This is on the back of the fact that there's been increased demand. Of course, we know the forces of demand and supply and how they affect the general FX market. We've also seen that the CBN has not intervened lately, which would normally spur activities in that space. However, we see that the Naira has declined by 60 basis points day on day to close at 162, 1.12. Market turnover has also decreased to $166 million. We've seen range of bids within the range of about 1,546 to 1,635 Naira to the dollar. Now, recall that the Naira had started showing this decline from late June, when we saw the Naira cross the 1,500 Naira mark at about, for the first time since May 2024. We have also seen that this is on the back of very increased demands generally for the Naira, for the USD. But of course, there's respite coming with the $500 million FCY denominated domestic bond that that is supposed to be issued in about 3 to 4 years, 4 months time. We, of course, 3 to 4 weeks time rather, we expect to see increased traction in that space, and then that will naturally spur the Naira to rally against the greenback.
Exactly. We'll leave the conversation here for now and continue to monitor the movement. Kenneth, thanks a lot for your time. That was Kenneth Onuoha, team member, Asset and Liabilities at UBA.